and we've been excited to present to the Rocky Mountain User Group for a long time now. We are based here in Denver, so we're in Littleton, and so we're a local company, and so a member of the group, and have been to some of the meetings. But yeah, now it's great to be able to finally present. There's a long wait list, so yeah, we're excited to be on today. Corey, can you see my screen okay, Corey?
Yes, we can. Thank you.
All right, perfect. Well, first, so we worked with Kraft. We've got some shared clients in Tennessee. So 3LS was one of the big ones. They had some big leasing requirements. So it's great to be on with Kraft. They're a great company. And so, you know, we're an SDN partner, and so I wanted to walk through and just give a brief overview of some of the products, and then get in and show our product in NetSuite a little bit. We've only got a few minutes here, so I'll be very quick. But a little bit about our company. So we've been around for 3 years, and we are based here in Denver. The majority of our company is right here in Denver, and we're kind of a mix of technical accountants. So I was a controller for a couple of public companies. We've got some management consultants who are, we're CPAs, and then we've got, I think we've got all of the big 4 accounting firms kind of represented among our group here. And then we've got some very deep technical expertise on the development side from NetSuite. So we focus 100% on NetSuite, and we view ourselves as that cross-section between NetSuite expertise and technical accounting. So all of our tools are catered around that, from really that accounting angle to solve problems for different accountants. And so as I go in, I wanted to highlight a couple of the different tools that we have. So we've got a lease accounting tool, which is the one I wanted to highlight today, that solves a big change that's happened in lease accounting. And we've got a lessor tool that is used for revenue recognition for companies that lease out assets. And then we've got our asset tool, which is a fixed asset accounting tool. So if you have any trouble with FAM at all, we can probably help solve some of those problems. So it is, it runs full tax depreciation books, and it's an advanced asset management solution. And then we've got a loan solution that tracks interest in principal on, debt that companies have, and kind of automates the back end. Again, I was going to focus on the lease accounting side. And we have, through our, these 3 years kind of developing and building these products, we've helped companies like Stamps.com, Peloton, Avalara, Purple Mattress, Cloudera, Reddit, and Fortune Magazine was a recent one that we helped out with. But we've also helped some companies right here in Colorado, which we get really excited about because we're a Colorado company, like Cologix, Flowwater, CCRM, and there's a handful of others that are local companies here too. So we may have some of our users on the meeting here. So anyway, great to be on. The one I wanted to focus on though is it's NetLease. And there, a few years ago in 2016, there was a new accounting standard that was released around lease accounting. And it's not the most exciting topic in the world, but it does create a significant challenge for the accounting teams inside of your organizations. And so it went from being a very basic standard prior to 2016 to overwhelming complexity for a lot of these types of leases, like real estate leases or even equipment leases. There's a lot of complexity around transitioning onto this new accounting standard. And this was what caused this was really Enron and WorldCom, and a lot of these big frauds that happened in like 04 and 05 triggered the SEC, and then the FASB. The FASB is the organization that writes these new standards to take action. And it took a long time, but it's finally here. And public companies adopted in 2019. So some of you, your organizations may already be live on the new standard. Sometimes companies use spreadsheets, and sometimes, it's just too complex to manage that way, and they need a system, and that's really where we come into play. This is a screen that kind of shows the life cycle of a lease as well as all the requirements, and we won't go through many of the requirements, but one of the things I did want to highlight, if you register with us today, we are offering a free lease accounting template, so that in Excel, and we'll send that to you. And it's a way, if you've got some basic lease accounting requirements, it's something that your accountants could leverage to kind of build that out and manage in Excel, or at least give an idea of how those calculations are derived and generated. And so there's that, and then there's also Amazon gift cards, I think, that we're giving away as well. So, so anyway, yeah, we encourage you to take a look and register here. So with that, I wanted to go into our solution a little bit and walk through it directly here in NetSuite. So, so first, all of our solutions are 100% native apps inside of NetSuite. We don't deal with anything outside of NetSuite. We focus 100% on NetSuite, and so our apps are all built into the platform. Obviously leveraging like custom records, custom fields, and then SuiteScript on the back end to run a lot of these processes. And so where that is a big differentiator, there's other lease accounting companies out there. The challenge is they don't integrate into NetSuite, and so it represents like another system that kind of sits outside of your ecosystem, and then the accountants have to kind of manually extract data and then upload that journal entry information into NetSuite. And so we get to bypass that entire process, and we can book transactions directly into the GL right here in NetSuite, and everything that you'd expect. All the reporting engines are applicable here, as well as like permissions and workflows all tie into our solution here. So it makes it a very easy solution to spin up and then manage for the administrators, as it's not a new tool that they have to get familiar with. So I didn't want to get too deep into the technical accounting here, and I've only got a few minutes left, and so, but I did want to give an overview of what our product does and what it looks like. So I've got an example lease, and in the past there was some nuances to accounting for leases, but it was pretty straightforward. Something that with a basic spreadsheet or with with your accounts payable team, they could usually manage the majority of it because it was just a very basic process. And now the pendulum has swung in the other extreme to where you have to create an asset and a liability on your balance sheet, and then you have to amortize those down kind of at different rates over the life of the lease. And then, of course, if there's any modifications or any changes to the lease agreements during its life, they have to be reflected using some complex modifications to address how that impacts those balances that are on your balance sheet. And so, so with that kind of as a backdrop, I wanted to get in to our tool. So this is a lease record that I've set up. This is, I've kind of preceded the data. With more time, we, walk through the whole process. But in this case, this is, our net gain headquarters here in Littleton. It's not an actual photo. I don't know if there's any buildings like that in Littleton, but I've set this up. This is an operating lease, and it's a 10-year term on this lease. And what's often complex about real estate leases is there's escalations in the payment structure, throughout the term of the lease. And so in this case, it's a 10-year term, and the payment's starting out at $9,850. And then, of course, we have to come up with an incremental borrowing rate, and I've plugged that in at 5%. But oftentimes there's lease incentives that come along to help you, build out your unit in advance of moving in. And sometimes there's fees for initial direct costs to obtain the lease. And so all of these factor into the calculation of the liability, and then the ROU more importantly. And so with that, this information, there's also a few other nuances that I wanted to highlight for this specific lease that I have, and that is the variable payment schedule. So if we look down here on the lease payments tab, you can see that in 2024, the price goes up to $11,500 a month, and then in 2027, it goes up to $12,875. And so what our system does is you plug in those escalations or rent-free periods are pretty common, and then we will build out the full amortization schedule for the life of this lease in advance. And so this way, the accounting team can see exactly what the GL impact is going to be well in advance of actually booking those journal entries. And it makes it easy so that when we do book the journal entries, there are no surprises. We're just pulling data right off of the schedule that we've generated in advance. And you can revise and update the schedule as many times as you need to before actually commencing the lease and then booking the journal entries. But so let me go in. So what we've done is we've calculated here the lease liability. We've taken into account any lease incentives or any initial direct costs associated with this to calculate the right of use asset balance. We've created the single lease expense. All of these are things that are going to drive what hits the P&L and what hits the asset and the liability on a month-by-month basis. And so we built this all out in advance. And then on the far left here, you can see we've got the payment. And in this case, I'll skip ahead a couple of periods, and you can see that it's escalating up in accordance with that schedule that we locked in. And then with this schedule, we can go in and then generate our initial balance entry, and then we can generate our month-over-month journal entries. And so I wanted to highlight this because, you know, as opposed to doing this in a spreadsheet or using an outside system, it turns this process that can be complex and cumbersome for the accounting team. You know, we had one client that was talking about how, you know, they spent, I think it was like one person spent 3 days every period doing this, and it shrunk down to an hour, you know, using our system. And because of the complexity around kind of aggregating the data and putting together some of the disclosures, and then of course booking the journal entries. So in this case, you can see we brought the data right off of that schedule and have booked the journal entries. And here we're using custom transactions, so it makes it easy to filter down what the impacts are of the lease accounting standards, you know, kind of pre and post adoption. So without going, you know, too deep into the entries, we also support multi-book. And so with a little bit of configuration, we can post other types of entries into other books. So this is an operating lease. Internationally, there's not the concept of an operating lease. There's only the concept of like a financing lease. And so we can, for, you know, international reporting, like we can book an operating lease in the US, and then in those in a secondary book, we can book the financing journal entries there as well. So we fully support multi-book, we fully support foreign currency, and all the nuances that go along with that. We support the old lease accounting standard, and then we have kind of a one-button transition onto the new standard, as well as like modifications and all the complexity that comes around that. But some of the things that are nice here is we've got documents that can attach right here to the record. And then any of the transactions that sit behind this, like the payables and any other taxes or CAM charges that come along with these leases, can be tagged right here to the lease record. So you get that full 360 view of everything that's going on with the lease here. And we're about at time here, so we don't have time to go through and touch on reporting, but there are a lot of new disclosures. Of course, we address all of those disclosures along with it. So yeah, please feel free to reach out to us and let us know if your companies have any needs that way, or at least keep us in mind as your teams start to transition onto the new lease accounting standard, and let us know. Yeah, reach out and we'll get you that lease amortization template schedule, so that at a minimum you could have something that's robust in Excel that'll help along with the process. So with that, I'll turn it back to you, Corey. Thanks again for your time, and it was great to be able to present right here in Denver. So thanks.
Awesome. Thank you so much, Adam. And just real quick on the Amazon gift cards that you mentioned, is that through the same link that was posted there?
It is, yeah. That registry, I think that's where we're gonna make, do the drawing for the Amazon gift cards, and then, but everybody on that list will send that Excel template through too. So, yeah.
Okay, excellent. And so everybody, if you haven't noticed it, it's in that link was posted in the chat window by Zach, and you can go and click on that and sign up for that template. Thanks so much, Adam. We really appreciate you sponsoring the user group. So give me just a moment here, folks. I'm going to get switched over and get my other slide presentation loaded up here. Okay, so we'll jump right in. This is the CPE check-in keyword. I'm going to leave this up for a minute and let everybody grab that check-in keyword. So go to the link. I will post the link in the chat window as well. But everybody that signed up should have that through an email at this point. So there is the CPE check-in URL in the chat window. And just a quick mention, please make sure that you are muted. We can mute all, but it's better if we self-regulate that. Just a few more seconds here, make sure everybody has a chance to see this. All right, here we go. So, as I mentioned, I am going to talk about the order to cash process, basically a high-level overview of what this process looks like in NetSuite. The intention of this is to set the stage for the other topics that are going to be discussed today. Our meeting is called Cash, How to Get Paid in NetSuite. This is a new topic we haven't ever talked about before, and so we wanted to basically just review the different methods of how to get paid in NetSuite. And so this is the order to cash process is a key part of that and understanding how that works. And then after that, I'm going to transition into customer deposits, which is a just one part of the order to cash process, or in the cash how to get paid in NetSuite process. So that's what we'll move on to here. So order to cash process, I'm going to discuss 3 key elements of this. There are other things that go into this whole process, but again, this is high level overview, so it's going to give you just an idea of what it should look like. So first of all, order entry. You got to have those orders represented in NetSuite. Then we have fulfillment and or shipping. That's part of the process in some cases. And then we have invoicing. So we'll go through and talk about each of those processes. And if you do have questions, I'm going to try and answer those as we go. So please feel free to pop those up into the chat window. And if Dana or Mike, if you guys can answer those questions in the chat window, you could do that as well. So we'll start talking about the order entry process. So I have a little bit of a indicator over here on the right-hand side of these slides that defines the record types that we're talking about in NetSuite. So for this process, there are 2 record types that represent an order. There's a sales order and a cash sale. We'll talk about each of those in turn here. So a sales order is a transaction that records a commitment to sell items or services to a customer. Sales orders have no accounting impact until items are shipped or services are completed. So that's an important distinction between these 2 record types. And I'll also point out that pretty much any time you have a record in NetSuite that ends with the word order, that record does not have a GL impact. All of the downstream transactions from that record are going to have the GL impact. So we have a sales order, there's work order, transfer order, purchase order. I think that's it. That's all I can think of right now. But all of those transactions represent something that is going to happen, but it's not the transaction that represents it actually happening. Again, the downstream transactions are going to be the representation of that. So from a sales order, the downstream transactions are going to be an item fulfillment and an invoice and or a cash sale, which I'll talk about each of those as we go through this process. So then a cash sale, this is a transaction that records the sale of goods or services for which you receive immediate payment. Enter a cash sale when payment for goods or services has been received at the time of delivery. I like to think of a cash sale as a sale that you walk into a store, you go pick a product up off the shelf, you take it to the register, you give them cash or a credit card or a check, and you take that product and you leave. So that's a cash sale. So a cash sale in NetSuite is the same concept. It represents the transaction is done and over with. There's no item fulfillment required. There's no invoicing required. It's all just a one and done type of process. So the cash sale part of this, basically, it does factor into the cash how to get paid in NetSuite concept, because the ways that you receive the payment apply to the cash sale the same that they'll apply to an invoice down the road. So those are the two main transaction types for order entry. So let's see, Valerie has a question. If a customer has terms like Net30 and has credit card info on file, how do I invoice versus cash sale post fulfillment? So I think we'll get to the end of this discussion, Valerie, and then if we haven't answered that question, we'll come back to it, because I don't want to jump ahead too far into this process. Okay. All right, so let's keep talking about order entry. So again, we're still talking about sales orders and cash sales, and I want to just discuss real quick the ways to create a cash sale or a sales order in the system. So there's basically three main methods. We have manual, which is through the user interface. You go into NetSuite, you go to your, you can go to a list of sales orders and hit new, or you can go to your quick add drop-down menu and create a new sales order from there. And at that point, you enter in all of the information, the pertinent information for the sales order. You know, the customer name, the product that you're selling, if you have any terms, anything that's important in that sales order. Another way to get sales orders or cash sales into the system is a semi-automatic method through a CSV import. So in this option, you basically would create an Excel CSV, an Excel file, and save it as a CSV format. And you would, in that file, you have all of the pertinent information. Instead of manually entering into NetSuite, you have it all listed out in the file. You go to the CSV import process, and you can import those sales orders or cash sales, mapping the fields from the Excel file to the correct fields in NetSuite. So that's a semi-automatic, because you can create a whole bunch of records at one time through the CSV import, but you do have to prepare the data in Excel properly first. The third option is a fully automatic process, and that would be through like a web services integration. And so what this is there's typically a third-party middleware as part of this process that would grab information from an external system and then import that information into NetSuite. And in these examples, you can have the process happen maybe once every 15 minutes or once an hour, and it's all fully automated. So you set it up at the beginning of the process, you map the fields, and then the orders are just automatically created in NetSuite for you. If you have a lot of sales orders and external systems where maybe customers are entering those orders, let's say, for example, your own e-commerce website, you can have these middleware applications pull the information out of your website backend and then import that into NetSuite. So those are the main three ways to import these orders or these records into NetSuite. I am going to, let's see, looks like Dana and Mike got that question. Okay, so let's see. Yeah, you guys got that. Okay, I'll move on. All right. So this is just a graphic representation of the sales order entry process. I'm a visual learner, visual person. I like to see these things in a graphic format, so sometimes this is easier to understand the flow of how things should happen. So here, you can enter a sales order, and this process is really just for sales order. You can also create a sales order from an estimate. And so if you have an estimate process, so you want to send an estimate, or also known as a quote, to your customer, and that customer approves the estimate and says, yes, I want to do that, then you can convert from an estimate to a sales order, and it'll automatically transfer all of the information over to the sales order. So then the next step down the flow here is, does the sales order require approval? So there is also the ability to have sales orders automatically approved if they're entered in the system, or you can go through an approval process. So if you want somebody to have to review that sales order before it becomes an approved transaction, you can do that via workflow. You can just manually edit the sales order. There's ways to help automate that process if you do want to require approval. So the next step here is, if the sales order requires approval, we would go to this site here, and you could go to say, no, it's not approved. The sales order becomes canceled. At this point, when you cancel a sales order, what it does is this is just a little pro tip. On the line level of each of the items on the sales order, there's a little box that says cancel. And if that, basically when you hit cancel a sales order, it marks each of those lines as cancel, yes. If you want to uncancel a sales order, you can edit the sales order and go to the line level of each of those lines and uncheck the box that says cancel. And then the sales order will become uncanceled at that point. You don't have to uncheck all of the items. You can uncheck one or two or well, yeah, it just has to be at least one of them, I guess. And then the sales order would basically become pending approval again. And then if it gets approved, then we can go down this path. If it goes approved, then we get to a fulfillment queue. So the fulfillment queue can be based on whether or not you need to physically fulfill or ship products to your customer. If you offer just services, it may say pending fulfillment, but then when you fulfill, it just goes into pending billing. There's a couple of different ways that works with service type items. So question, cancel, is that the same or different from close? That is the same. So that canceled order is when you hit the close button on the sales order. That's the cancel process. And I think I misspoke. The sales order line level, it'll say closed, and that in the checkbox there is closed that you would want to uncheck. And then another question is, deleting a sales order the same as canceling a sales order? And the answer is no, it is not. If you delete a sales order, you cannot undelete it. It's a done deal. So you would basically have to recreate that sales order from scratch. If you cancel it, like I said, you can go in and uncancel it at that point. It still exists. It's just a kind of a dead end transaction at that point. All right,
hey,
here
Corey,
yes.
Just to add a note on deleting sales orders as well. If you're using ARM for revenue, advanced revenue management, sometimes your revenue arrangement can hang off the sales order. So you would actually find yourself not able to delete the sales order. So often it's better to close versus delete.
Yep, I agree with that. And there is no problem. There's no, I guess, downside to having a closed sales order. It's just a transaction that sits there, or a record that sits there, and nothing else will ever happen with it again. So yeah, I agree. I think deleting is an extreme measure, and I don't usually recommend doing that. Thanks, Mike. Okay, let's move on. So fulfillment and shipping. So at this point, we're going to talk about the record type of an item fulfillment. And so fulfilling an order is shipping the items to fill an open order. When you fulfill an order, you pull the items from inventory, package them up, and send them to your customer. So there's a couple different ways that you can do fulfillments. A lot of people do shipments from your own facility. So you manage the logistics of stocking inventory and warehousing it, and then you go pick it off the shelf, you package it up, you send it out to your customer. And then a lot of companies also do shipments from third-party logistics, or a 3PL. So basically a 3PL is an independent warehousing system that stocks your inventory, your physical items, and you would basically send them an order to say, take this product or these products, pack them up and ship them to your customer. And then that 3PL would send the fulfillment information back into your system, or you can manually enter it as well. There are also web services integrations options to go to 3PLs to get all of that information transferring back and forth automatically. So an example of a third-party logistics is fulfilled by Amazon or FBA. So basically in this scenario, the 3PL is Amazon. You keep your inventory in their warehouse. When there's an order for that product, they ship it out, and then they send you the information of what just happened. This is a little bit different from the regular process, but you can think of it as the same concept. And then there are a whole bunch of independent fulfillment centers around the country. I mean, some companies will have multiple fulfillment centers based on geographic location. So maybe you have one that is kind of central east and maybe one central west, so that if you have two fulfillment centers that are evenly placed throughout the country, then you can get your shipments to your customers, you know, in a really fast time frame, depending upon where they live. So those are the basics of fulfillment. I'm going to go ahead and move on here. So here's a basic fulfillment process overview. Again, I like this graphic representation. So we have a sales order that's created, and I'll just point out real quick, a fulfillment process does not happen with a cash sale, because remember, a cash sale, you give them the money, they give you the product, it's done. There's no fulfillment required, there's no invoicing required. So this process only is triggered from a sales order. So the sales order is created, a fulfillment request is created, and there's a couple of different ways to do this, but one of the standard flows is to print a picking ticket. That gives your warehouse the instructions of where you need to go pick that product from your shelf. So you pick the items to start the fulfillment. An item fulfillment record is created in NetSuite. From here, an option is to print packing slips and return forms to put in the package to send to your customer. And then there's basically three stages to an item fulfillment. There's a picked stage, a packed stage, and a shipped stage. On the sales order, these first two stages do not say fulfill. The sales order will still say pending fulfillment when it's just picked or packed. The sales order will change to pending billing once the item fulfillment is marked as shipped. So from here, you would maybe send your customer their fulfillment information, like their tracking information, and now your sales order is ready to be billed. And when we say billed, we mean an invoice is created off of that record. So now we're into the invoicing process. The record type here is invoice. So an invoice is a record of a sale to a customer. Invoicing is the process of creating bills for goods and services that customers receive. Record an invoice when payment is not received at the time of delivery. And there is a little bit of an exception to this, which we'll talk about, which is customer deposits. It doesn't make that 100% true. Billing a sales order creates a record of debt owed to you by your customer for a sale. When you bill a sales order, your account receivable ledger increases by the amount of the bill. So the invoice represents basically that you need to get paid by that customer, right? I just wanted to mention real quick that the terminology billing and invoice is used a little bit interchangeably here, and it's often confused with the purchase order and bill process. So the purchase order will create a vendor bill, where a sales order will create an invoice. But we say that we bill a sales order and by creating an invoice. So I just wanted to point that out to be aware of the difference and the distinction there. So invoicing, methods of delivering an invoice to your customer. We have a manual. You can just go to the invoice, hit the print button, print it out, send it in the mail to your customer. There's a semi-automatic method. You can save and email the invoice, and if your customer record is set up to automatically get emails, then it'll just automatically email the invoice to them. And then there's automatic processes. There's billing operations, workflows. Also, you can get invoices sent to your customers through EDI transmission. EDI is a standard method of transferring documents back and forth between you and your customer or your vendor, for example. And then there's other methods, such as creating a CSV file that's put onto an FTP server, and then your customer or vendor would pick up that CSV file from the FTP server and import it into their system. So there's other methods other than EDI to transmit information back and forth. There's also API, forgot to put that on here. API is an option, is a programming interface to basically automatically connect the systems together. There's a couple of different preferences and options that I just wanted to, that kind of get honorable mention here in the invoicing process. First of all is this invoice in advance of fulfillment option. It is a feature that you can enable in your accounting preferences. And basically what this does is it says that you are able to create an invoice for all of the items on your sales order before all of those items are fulfilled. Now, normally what will happen is you can invoice a partially fulfilled sales order, and it will only invoice for the items that you have already fulfilled. In some cases, you may want to invoice your entire order before you fulfill it to the customer. And that's what this preference allows you to do. Then we also have approval routing. And so approval routing is a feature you can turn on so that if you want to, if you want your invoice to go through an approval process, like similar to the sales order that I mentioned earlier, then you can enable that and then use workflows to create an approval process to route your invoices. Okay. So from here, I'm going to switch to customer deposits. So customer deposits, again, is just a piece of this whole process, but it's an important piece for our discussion today on how to get paid in NetSuite. So first of all, we'll describe customer deposits. Again, record type I'm talking about is called customer deposit. There's also a record type called deposit, which is part of your banking process. They are two different things. So this is specifically called a customer deposit. So customer deposits record a customer deposit when a customer makes an advance payment for an order or project. A customer deposit record tracks funds the customer has paid until the goods or services are delivered. These payments are recorded in your GL as a liability until the goods or services are actually delivered and do not affect the customer's accounts receivable balance. So basically, it's a way of saying you've gotten paid for the order, but you haven't shipped the stuff yet. So this is a little bit of a little graphic representation of this process. So here we would say customer remits a deposit for a future order, that you record the amount of the customer deposit, and then when the order is billed, and remember billed means invoice created, you apply the deposited amount to the open invoice. And that's part, and so you'll see this language throughout NetSuite that can get confusing. They say to the open bill, but it's an invoice in this case, okay? So there are two ways to record a customer deposit. You can go to the customer deposits page. So you would go to transactions, customers, record customer deposits. And in this case, you could just click on record customer deposits and it will take you to a new customer deposit transaction automatically. Or you can click on list and it'll take you to a list of all of the customer deposits in your system. And from there would be a new button at the top where you could click new and you would be able to create a customer deposit from there. So that's option number one. Option number two is you can create a deposit directly from a sales order. So on most sales orders, you're going to see this create deposit button. And I'll just also mention that based on the configuration of your NetSuite environment, this create deposit could be in the menu system, in the actions drop-down menu. And you may not see all of these other options up here, but there's usually going to be that create deposit button there by default. Once the sales order gets billed, invoiced, then the deposit is automatically applied via a deposit application record. So there's a key difference between these two processes. If you create a deposit or a customer deposit directly from the sales order, when that sales order gets invoiced, the deposit will automatically apply to the invoice. And if it's a process or if it's a full deposit to cover the entire invoice amount, the invoice will be marked fully paid. If it's just a partial deposit, the invoice will reflect the open amount. So the total amount minus the deposit, and that'll be the open amount remaining on that invoice. On this other process, if we do it this way, that customer deposit will be recorded on the customer's record on their financial subtab, but it won't necessarily be applied to a specific sales order. Now you can define or choose a sales order for it to apply to through this process, but you have to manually pick the sales order to apply it to. So those are the two differences here. And then when you invoice it, you can go and you can choose a deposit to apply to the invoice instead of it happening automatically. So one other point to mention here is that when you save a customer deposit, one of the following statuses will be applied to it. First of all, unapproved payment. So this status means that the deposit has not been successful. Possible reasons for this include insufficient funds in the account or the credit card used for payment is reported lost or stolen. So basically this unapproved payment status is an error. It means that the payment is not accepted and this is not a complete process at this point. The other two are different. So there's not deposited. So this is a successful status. The deposit is being processed, but the funds have not yet been deposited. So for example, if you create a customer deposit and you choose undeposited funds as the place for this deposit to go, the status will be not deposited. If you create a customer deposit and you choose an account for it to go into right away, then it'll be marked as deposited. So this status is applied when the funds have been fully deposited. Okay, so I have about 5 minutes or so left to go through a little bit of a demonstration. So I'm gonna take just a minute here to switch over, and I'm going to create a sales order, create a customer deposit, and then I'm going to invoice that sales order and apply the customer deposit to the order. So give me just a second here to switch over. And that should catch up. Nope, I gotta stop sharing that. I gotta stop my slideshow, sorry. Hang on just 1 second. There we go. Okay, so here we have our customer record in NetSuite, and this is a demo account. So please bear with if there's any delay. It's a little bit slow sometimes, but I'm going to go ahead and create a sales order. So customer that we're working with today is Acme Systems Incorporated. I am going to go to this menu, my quick add menu up here. Going to go to sales order, open that up in a new tab. So again, we're going to create a sales order. We're going to create a customer deposit, and then we are going to invoice that sales order and apply the customer deposit to the invoice. So my customer Acme, okay? And in this case, I don't need to do anything else except for add an item to the sales order. Come on now, here we go. So let's just look at a list of items available. Again, it's our demo account. Sometimes it's fast, sometimes it's not. Apparently right now it's not. Okay, let's try this again. Okay, so I'm just going to choose a jacket and add that to my sales order. Okay, that's great. You can turn off that message, by the way, and that one, I think. Okay, so that's it. I don't need to put anything else on here. I mean, normally if you're going to fulfill this, you would want to make sure that, you know, the shipping information is correct. You may want to define billing information at this point. I'm not going to. So I'm just going to hit save. And while that's saving, I am going to go to transactions, customers, and record customer deposits. So I'll create a customer deposit. So let's say this customer had $100 towards this jacket that they purchased. So let's make sure that this is finished. I might have to refresh that page. Okay, so here's your sales order. Now it's pending fulfillment. So we need to fulfill it and then we can bill it after that. Here's our customer deposit. This is sales order 18899. It's probably not in this. Oh, it is. Fantastic. So what I can do is, remember, this is the first method of creating the deposit. So I can choose undeposited funds. I can choose an account for it to go into right away. And then I can choose a sales order, or I can not choose a sales order. So I'm going to go ahead and pick the sales order to apply this to, because I know what it is. Remember, we could also click create deposit directly from the sales order, and it'll be automatically applied to this sales order. So I'm going to come down here, and then we have these payment method options. And this is an important aspect of the customer deposit, because you need to know how you're going to get the cash, how you're going to actually receive this money. So if you have a credit card processor set up that is integrated with NetSuite, which Mike Keckline is going to talk about in a little bit here, you can process and charge the credit card directly from this page. It's not set up in this demo account, so I'm going to just do a cash. We'll say that they sent, no, let's say, well, I'll say check. Let's say they sent us a check in the mail, and as a deposit for this item, and we're going to invoice them for the balance after we send the product to them. So that is our customer deposit. Just going to hit save on that. And real quick, while that's finishing up, I will show you on the financial sub-tab, this is Acme Systems Incorporated. There are some deposits that have been applied or created for this customer, and this will show what their deposits balance is. And you can go to view all transactions is one way. You can see what deposits are there and then see if those deposits are linked to any sales orders already. In this case, we know that this customer deposit is linked to that sales order, so we don't have to worry about that. I'm going to go to the sales order, and first of all, we'll fulfill it. And I suspect that this invoice in advance of fulfillment is turned on in this account. I did not look at that, but I wouldn't expect to see that bill button there in advance. So here's an item fulfillment record. We can see that there's here's those three status options that I talked about: picked, packed, and shipped. We'll just mark this as shipped. Normally, you would want to put tracking information in this page right here, and then we'll save that. Location. Oh, I may not be able to save this record if it's not. Let's see what happens. It's going to make me do an inventory detail. Come on. Oh, it's going. Okay. Okay, this is almost ready. And then we should be able to bill that sales order, and it'll create the invoice. And then we can see how the deposit will be automatically applied to the invoice. Come on now. Excellent. Now we'll go back to our sales order. And we can bill. So now that status went from pending fulfillment to pending billing. Thinking. Oh, and I just got an email that says my order has been fulfilled. I guess that's configured in the account here. So here's the invoice, and it should automatically add the items. I really shouldn't need to do anything on this record manually. I am just going to let it load up and then hit save. And then we'll review this afterwards. So Stan's question, what happens if a sales order is billed prior to fulfillment taking place? Does it capture it as deferred revenue? Oh gosh, I don't know that I can answer that question, Stan. I don't, my gut, without doing a little bit of investigation, is that it does not capture it as deferred revenue.
I believe that, so this is where I haven't done fulfillment in a while, but I believe that item fulfillment records don't, I think they only impact your assets, i.e. your inventory, and your expenses, i.e. COGS. You'd have to correct me if I'm wrong there. So your deferred revenue is completely in the invoice. And I think the short answer is going to be yes. If you create an invoice and you're using ARM, you can hit AR and DR regardless of what has happened on the fulfillment side.
Yeah, that sounds right, Mike.
Okay, great. Okay, so let's see. That's our invoice, and now we can see that our invoice is marked as paid in full. So let's see. Guess that's not what I was expecting. Here's our related transactions, deposits. Okay, so so it did take and it applied the full deposit. Or took the open deposits available and applied them to this invoice. Yeah, live demo. So I guess I wasn't expecting that to happen. I believe there's some configuration where you can auto apply, have those things auto apply or not. But anyway, you can see that the deposits, it took the deposits and it applied them, so this invoice is marked as basically paid in full. So now the process, the entire process is complete from there. Okay, so that is the end of our deposits, customer deposits, and order to cash process discussion. I'm going to stop sharing and we'll switch over to hearing from Mike Keckline. All right, and Mike, I think you can just start presenting without me having to make you presenter.
Probably so. Let me get situated here.
And so after this part of the presentation, we'll take about a 10-minute bio and coffee/tea break, and then we'll come back after that.
All right.
Okay, perfect.
And Corey, what time is the break, just so that I'm...
We have you slotted for approximately 30 minutes for this section. So
okay, cool.
Yep.
All right. All right, everybody can see my screen, I'm pretty sure.
Yes, sir.
So we're going to be talking in this section about specifically receiving cash through credit cards and the fuzzy topic that NetSuite calls electronic bank payments. I can say, for some background, we are actually at the company I'm with now, Vertifor, we are actively in this process, at least, we're actively in this process with changing banks. So the electronic bank payments is a little fresh in my mind, and this whole process in general. So the audience I'm gearing this towards, like the ideal audience here is somebody who's actually not doing this. Like, so today you're receiving credit cards manually, or maybe you're receiving them through a website because you got an e-commerce going on, and that you're like, there's got to be a better way. Also for people, which I think could be a good majority of you out there who are only using credit cards and you're not using this amorphous thing called EFT or ACH. So I'm going to try and shed a little light on those. What are they and how could you use them? Why would you use them? Why would you not use them? And we're going to talk a little bit about Celigo as well, because we use it, but mainly we're going to just talk about credit cards and electronic payments. All right, so here we go. One thing you'll find if you've seen me present before, if you see anything in my slides that say something, that's probably something that if you paste into your global search, it will take you to the right page. The exception being that I noticed in putting these slides together, this help colon doesn't appear to work anymore in NetSuite. So if it says help colon something, that means go into NetSuite, click the help icon, and then literally type in payment processing options, and you will see this thing here. So this little snippet here I found in NetSuite's help. It's actually pretty useful for a super high level summary of like, how does cash flow in or out of NetSuite? So, they've got this money comes from who, money goes to who, how does this happen, and who's the processor? So in this talk, we're going to talk about credit cards, alternative payments, EFT, and I'm going to do a lot of hand waving on the EFT slash ACH, what's called direct debit. So this is going to be the electronic payments, receiving payments. But I'm going to touch on the just ACH in general because it is confusing, even in the thick of what I'm doing now in our bank transfers and all that. It still can be confusing. All right, so we're going to begin with the end in mind, which I think is Covey's rule number 2 in the 7 habits, if I remember right. So that is, I got a customer payment record. Like I want to tell NetSuite that I'm receiving a payment. How do I do these payment method things? So Corey touched on this in his talk, that there's this drop down on a customer payment record that's labeled payment method. So the first thing is, did you know that you can create your own payment methods? You can name them whatever you want. And then when you pick one of those payment methods, it can respond accordingly. So it can, and we'll get into that very briefly here. So what we're kind of talking about in this part of the talk is just these payment methods and how to create custom ones specifically around credit cards and ACH. Okay, so a little prelims is if you want to use credit cards or so integrated credit cards in NetSuite and or ACH, you will have to turn that on. So to find that, you'll go to page enable features. There's a tab called the Transactions tab, and you will see this payment processing section. This is what we typically have. So a couple notes. So credit card payments, that is what's going to enable your ability to process credit cards directly through NetSuite. Electronic funds transfer, otherwise known as EFT, is what you will need for the ACH transactions. Something worth noting. So I'm a little bit of this talk for y'all is going to be do as I say, not as I do in a way, in that there are things that I've learned along the way. It's like, wow, if I would have implemented this system from scratch, like I probably would have done that. Or if I was implementing a new system today, there are actually things we'll talk about on the slides down here that used to not be there. And now NetSuite's saying you should really do this. So one thing is the credit card soft descriptors. So if you are thinking of turning on credit cards in NetSuite and haven't ever done any of this, I would recommend looking at the soft descriptors. My understanding is by enabling this, you can have more control over, if you think about your customers, when they look at their credit card statement and they see a line item for a purchase from you, that soft descriptor can give you more control over what shows up in that line item. So this is something that if you're implementing credit cards, I would recommend looking into. Payment instruments is another thing that looks to be fairly new in NetSuite, and I would recommend if you are, going to be enabling credit cards for the first time in NetSuite, I would actually highly recommend turning on payment instruments and using payment instruments. Again, it looks new. Everything I'm reading from the NetSuite documentation seems to be indicating that they're trying to nudge their customers towards using these. That they are basically just the same end goal, but just a different way of accomplishing it.
Mike, I'll just add real quick on the payment instruments. There are like some of the credit card processors are now, their built-in bundles are using the payment instruments as well. So I agree that they're shifting towards that, and I think it might be a requirement moving forward.
Yep. Thank you, Corey. Okay, so we'll go into the first payment method, the simplest, but actually could be pretty useful for some of you, and that's the offline payment method. So if you went to page:create payment methods, or you went to page:'payment methods and click the little button that says create new payment method. This is how you could create a custom payment method in that dropdown. The offline payment methods is basically telling NetSuite, it got paid somehow, somewhere else. Don't worry about actually capturing cash. Just trust me, the cash is there. So this would be really useful for, if you had an e-commerce site where you're collecting cash, integrated in your website, and the cash is in your bank, it is, but you just need to tell NetSuite, hey, listen, trust me, the cash is there. But if you wanted to this is where reporting gets useful, cool, the cash is there, but did it get in my bank through the website, or did it get in my bank through, maybe you have some other kind of channel, third-party sales channel. So you could create an offline payment and call it website payments. And then you could run reports and say, show me every single payment record that has a payment method of type website payment. The other thing that's interesting that I'm not going to spend a lot of time on, but I think, if you're taking payments and you're dealing with bank rec, undeposited funds becomes a thing. You either love this or you hate it, or maybe a little bit of both. I think for me, it's a little bit of both. And you can see this in two ways, but basically in this payment method, you can pick the default behavior of that payment method. Should it post to undeposited funds, or should it post directly to our bank account? And there are pros and cons to both. I don't know if we should get into that here. I didn't plan to get into that. So just be aware that with the payment method, you can pick the undeposited funds behavior. All right. So that was creating a payment method of type offline, which basically says, don't worry about it, the cash is in the bank. Or, if you say, up here, if you say, quote unquote, the cash is in the bank, but you say undeposited funds, basically what's going to happen is at some later point in time, you've got to tell NetSuite, okay, yeah, the funds really are in account X, bank account X. It's not in this kind of holding undeposited state. But again, if you know it shows up in account X, you can just pick this and pick the account. So in this case, you would create a payment method of type. You'll have this type payment card. There's a couple of other types, but payment card is what you probably want for a credit card. And then we're going to talk a little bit later about these payment processing profiles. So this conceptually, this one screen kind of ties together a few things. It gives you a little option on your drop down when you make a customer payment records that you can say like for instance, we have a payment method of type Visa and another one of type MasterCard and another one of type Discover. The truth be told is that no matter what the payment method is, they all go through the same payment processing profile, which again, I'll walk you through shortly here. But it gives you a nice reporting capability to be able to say Visa or MasterCard. You could also create a payment method of type credit card and just doesn't matter if it's Visa or MasterCard, it all still goes through the same payment processor. Another point, a note, and this I do not have a lot of experience in, you know, maybe this time next year I will be able to say differently, is this line level data. So for any of you who are not using credit cards yet, and your customer base is, you know, you have a healthy mix of customers who potentially use what are called P cards or purchase cards, you will become aware pretty quickly that your interchange rates, the cost of using that credit card is much lower if you use something called purchase level 2 or purchase level 3 transactions. Those are settings you set in NetSuite, and this line level data is a big part of that. So from the super high level, if you're thinking of using NetSuite for credit card processing, I would investigate at that point in time, or be aware, first off, be aware that NetSuite does support purchase level 2 and purchase level 3 transactions. It entails checking boxes. This is not the only place you would check the box for that kind of thing, but be aware that NetSuite does support it. Let's see, so this is also on page called payment methods. Basically, you're saying this payment method, whatever I want to call it, is a credit card payment method. And if you process this particular payment method, go use this particular processor. So you could, in theory, have multiple processors going on, you know, multiple banks that you're processing your cards through, and you can switch between them by just using a different payment method. All right, so under page colon new payment processing profile, so we're going to talk about processing profile. So this is where processing profile is basically I want to charge my customer's credit card, but I've got to go through what's called a payment processor to do that. Like I've got to go through a third entity and another entity to handle that transaction. These are what NetSuite's calling the payment gateway integrations that are native to NetSuite. So this is who NetSuite supports. I was actually surprised to see this list because last time I remember hearing about this, I just knew about, I believe it was like Merchant E, WorldPay, and CyberSource. So these others are kind of new to me. I was surprised to see that. So all to say, if you're on the market and you're shopping payment processors, and any of these show up on your list, you can immediately in your mind say, oh, cool, I know that those guys just work with NetSuite because they show up in this page. So again, this is page called new payment processing profile. The examples I'm going to use in this talk will be with CyberSource because we use CyberSource. So what I did, you know, I picked just add profile. I imagine if we used a different payment processing, I'd install it and then it would show an add profile and I would click add profile. So for CyberSource, creating a payment processing profile. So how did I get to this? I went to page called payment processing profile. I clicked CyberSource. So I clicked this add profile here. And I got to this page. So it kind of looked like this. And so I kind of obviously trimmed it so we can see the font a little bit. But this is basically what that setup looks like and what we're going to need. So I can put my own name here. I tie the processing profile to a subsidiary, the currencies. If I, credit cards have, and NetSuite handles either way, but credit cards can often have what's called an auth and a settlement, so that you do a bunch of authorizations, and then at the end of the day, you take a single batch and you settle it. And the settlement is where the funds actually get transferred. The auth is where you're just kind of reserving the funds. So in this setting, you can tell NetSuite, hey, when the settlement goes through, go hit this particular bank account to put the funds in it. Again, you have your line level data. So this would be for purchase level 2, purchase level 3. ABS and CSC are things that, if you're implementing credit cards, you're going to know about these things. So basically ABS, which stands for address verification, and CSC, which I believe is also CVV. It's that 3 or 4 digit security card number on the back of the card. You can kind of tweak, and I don't have this this other screenshot, but you can tweak NetSuite's behavior as far as whether you require ABS or CSC for the transaction to go through. If you don't require it, of course, it means more transactions. You have a smoother process, your customer does, but you have typically higher interchange rates because they're higher risk transactions, higher risk of fraud. When you're setting up a processing profile, you will have to know what's called a MID, a merchant ID. You will be, if you're in this screen, you probably have just gotten off the phone or on the phone with your processor. So you will have either, an email or something like that with stuff like this. So the merchant ID is typically like a text name. And then in the case of CyberSource, they have what's called a security key file. And this is something that you get out of the CyberSource web portal. So like you'll have a web portal where you can log into your CyberSource account, and buried in there is a place where you can get the security key. You download it out of the portal and you upload it into NetSuite. And that's what kind of cryptographically ties together, in the case of CyberSource, your CyberSource account to your NetSuite account, where CyberSource knows it can trust your NetSuite instance. And then, of course, you can do, supported payment methods like, hey, I only want to use Amex. Amex, for those of y'all who do credit cards, that Amex is usually its own like special snowflake in the world of credit cards. So maybe you would use one processor for Amex and another for everybody else, or all together. NetSuite does support the concept of what's called tokenized credit cards. So this is where a PAN, or otherwise, credit card number, is stored in the processor. So it's not even stored in NetSuite, it's stored in like CyberSource. And the only thing that's transferred around are these things called tokens, or these big long number things that aren't actually credit card. They represent what the credit card should be. And then, this typically would be, you probably check everything too, but basically what kind of transactions will you allow to go through this particular processing profile? Do you only want authorizations and sales, or do you also want to allow, credits and refunds to go through? All right, so hopefully that's not too much there, but that's basically setting up a credit card payment processing profile. This is something you'll do only once, and once it's set up, then your day-to-day transactions just use this profile as part of that payment method setup that we had earlier. So basically, once you set this up, you will get a payment processing profile show up in your payment method setup. And once you've created your payment method, which again is also just a one-time thing, then your payment method will forever show up on your customer payment transactions. That's kind of the flow conceptually of what we're doing here. All right. Any questions? No questions yet. Hopefully y'all are hanging on here. Okay, so some other notes on credit cards. And these came from the help page on accepting credit card payments. So NetSuite can authorize funds of a sales order and then settle as invoices are issued on that sales order. This was actually pretty cool. I've not actually experienced this myself, but that's kind of neat. So this would be, it could also be annoying, depends on how your time delta with how long your sales order stays open, right? So, but the basic gist was you don't have to do this, but you can, when you create the sales order, literally reserve the funds at the time the sales order is created. And then as you go and issue invoices against the sales order, then you can actually, settle or draw the funds at that time. Let's see, so it's configurable what NetSuite will do if the sales order authorization fails. So if you create a sales order and authorize against that and that fails, you can configure in NetSuite what to do with the sales order. Sorry, yeah, Corey, that is actually me. My daughter is doing a class. Is the background too loud?
No, I just thought it was somebody else. Sorry about that.
Okay, yeah, sorry about that. All right, let me see. So, CyberSource, oh yes, CyberSource does support verified by Visa and MasterCard secure code. So if you're wanting even better interchange rates, be aware that that is possible through those capabilities. Also, purchase level 2 and purchase level 3 is supported only through CyberSource and Merchant E, at least according to the NetSuite documentation. Then the credit card soft descriptors I had mentioned earlier, those are for fine-tuning what your customers would see on their statements, credit card statements. Be aware that I've never used it, but there is a chargeback suite app. So anytime you're dealing with credit cards, you're dealing with something called chargebacks. And this is where a customer refuses, they basically call their bank and say, no, that credit card is not, that transaction's not going to happen. I want my money back. And you got to go through this whole dispute process. There is a suite app related to that. Admittedly, I've not used it and I've never seen a really good solution for dealing with chargebacks. They're usually just a pain in the butt. And then bank reconciliation, that what I've typically seen is, you process your credit card processor then deposits into your bank, and then your reconciliation process, you're kind of reconciling the batches. But we internally have figured out a way to reconcile basically on a transaction level through what's called payment event data in NetSuite. Hopefully I can show you a little bit of that later. All right, before we go to ACH, I'm going to take a brief moment. So 2 questions. Is the background noise too loud? I think is my first question. If so, I'm going to see if I can go turn that volume down a little bit.
If you can, that would be great, I think.
Okay, yep. I will be back in a moment.
Okay.
Okay, I'm back. Sorry about that. All right, can you all hear me?
Yep.
Cool. All right, so we are going, and how am I doing for time, Corey? Am I already over?
We're almost at half an hour for you.
All right, everybody, it's 10:12. I guess, Corey, are we kind of at time now?
Yep, good to go.
Cool. So just a brief, something I had mentioned, this is a example for those of y'all on the credit card side of what, at the end of the day, like if you had a customer payment record that was paid through credit card, what kind of data you would see come back. So it's a lot of stuff. You actually get the response and request from CyberSource, and you can actually use SuiteScript to pick this stuff out. This is what we've done for BankRec. I guess something I didn't mention in all of this is that when you take a payment through one of these methods, NetSuite will go out and reach out to the credit card to like actually, auth the card. So you don't have, that's not like a separate process. All right, we will talk about ACH. Corey, how much time do I have?
I think you're good. Maybe 15, 20 minutes if you need it.
Okay.
Yeah, we should be okay with that.
Okay, cool.
Also, one quick thing, Mike, your response in the chat was to everybody, but the question was just to the organizers, so everyone
I'm so
can
sorry.
ignore that. So if you're wondering what that's about, so thanks.
Okay, thanks. All right, so we are going to talk about ACH. This is a not, I'm going to do my best to make things clear as mud here. So ACH from a high level is where you get paid in a bank-to-bank way. So your customer's bank, so the classic case, and we've all probably done this, is you log into your banking portal for, Chase or Bank of America or whatever, and there's like a little bill pay section, and you can go set up an automated bill pay, and your bank just pushes money to the vendor. So that is my every understanding I've had from NetSuite. That is what NetSuite is calling EFT. So that's where your customers push into you. But there is a different type of bank ACH transaction, which is called direct debit. And direct debit is where you, the vendor, you, the company, pull money from your customer's bank account directly from their bank account and drop it into your bank account. So you don't use a credit card as an instrument to do that. It's not a wire. A wire is, you have to pay a fee to do a wire, and wires are typically these kind of, well, they don't have to be one time, but wires are they go through like this clearing kind of concept. ACH is just bank to bank. Important point to note is ACH only happens in the US. So I think Canada has their own version, but we're only, just for the simple version, the Reader's Digest version, ACH equals US. So you're not going to be able to do ACH for people in Europe. So ACH EFT, that's where the customer pays you. Again, we're not going to talk about that too much, primarily because I don't know enough about it, but I definitely know NetSuite does support it. And I think that is the NetSuite Coastal integration. You'll see this company called Coastal. And then there's ACH direct debit, and that is where you can pull funds directly from your customers' bank accounts. So for direct debit to work, you have to know your customer's bank account info, i.e. their bank account number. One thing that I didn't add as a bullet there is that banks usually now have fraud and protection measures in place, so that if you just try and pull from somebody's bank account, it will deny unless you're on kind of a white list of vendors who are allowed to do direct debit. So you may have to work with your customers for them to allow you to direct debit from their accounts. Another thing to note, I think I note this a few slides in, is that for ACH, funds typically take about 3 days to clear. So between the time that you say, I want to do the direct debit, and the time that you actually get money could take about 3 days. Why would you want to do ACH? You would want to do ACH, quite frankly, because it's cheaper. So the interchange rates, the cost for you to receive money in this way is much cheaper than credit cards. It's also faster. There's no paperwork involved, right? It's all just automated. But ACH is a little more complicated than credit cards. So it's one of those you get what you pay for things, and we'll walk through that here. Okay, so from a super high level, paying by ACH direct debit. So this is kind of the process that you'd have to do. So you would have to work with your bank and get ACH banking info. So that's basically, I think it's called a company ID is one of the things you wind up getting there. You would then have to go to the customers who you want to pay via ACH and get their bank account numbers. So you will find that there is a place in NetSuite, I hope I got a screenshot later here, but there is a place in NetSuite in the customer record where you can actually store bank account numbers on a per customer basis. On the payment record, so if you're creating a payment record, there's a little checkbox down here that's labeled for electronic bank payments direct debit. So you'll have to check that. One thing I didn't know, way up here, should be step 0, is you have to install one. We have installed 2 bundles in NetSuite. So one is the advanced bank, y'all are gonna have to help me out on the name here, but it's like the advanced bank payments, electronic payments bundle. And then the other is like the electronic bank payments. So one is the advanced bundle and it's the other is the non-advanced bundles. And that will turn on, like, where did this checkbox come from, Mike? So again, from a high level, you'd create a payment, you'd check this for electronic bank payments checkbox. And then on a daily basis, you're going to run this process called generate customer payment file. I think I'll walk through that a little bit later here. That all that does is creates a file called, it's in a format called a NACHA format, N-A-C-H-A. So that's all NetSuite does, is it says, cool, I'm going to sweep up all the payments that have that box checked, and I'm going to create this magically formatted file and drop it in your file cabinet. You then have to take that file from the file cabinet and upload it to your bank. So you can either do it manually or there's ways to do it through automation. Then you have to wait 3 days for the funds to actually clear. So that's kind of the super high level of how a direct debit ACH would go. So in here, so this is the company bank details. So this is a page where you in NetSuite are creating basically an ACH direct debit quote unquote bank account. You're telling NetSuite about, like, if I want to do direct debit, here's the bank account information I would need. So you would specify your, kind of the name of it, the GL account in NetSuite. So any of these direct debits that you want to have happen, like where do you want them to impact your GL in NetSuite? The legal and print name you'll get from your bank. It's probably the name of your company. The file cabinet location is where NetSuite will drop that magic quote unquote NACHA file that it creates. The file name prefix is just, when it creates the NACHA file, what should it start the file name with? So it's a nice way to just identify the files. And then these templates are what you're going to get based on that advanced electronic payments bundle. So in this case, we use the ACH PPD direct debit template. There are other templates depending on which banks you're using. So this one is probably the most common, is my understanding. So this basically says create a file that's called ACHDD-something that is formatted in this particular style, and this template again comes from NetSuite. They give it to you in the bundle. So format it that way, and then drop it into this file cabinet folder. And then the transactions that you put in that file, just go ahead and hit the GL on this particular bank account. So it's interesting because there's this is where we start getting into the limitations of the direct debit. So NetSuite would just go ahead and post to the bank account, like, yeah, you got the money, you're good. But you actually know there's this 3-day delay. So it may not actually be in the, cash in the bank. So it could be another good reason to use undeposited funds. So this page colon company bank details is a one-time thing. You only have to set it up once, and then you just use, the direct debit checkbox from then on. All right. So for the customer, so this is where I was telling you that on a actual customer record, you would, type in their bank account number. So this is kind of some screen snippets of what that would look like. So under the customer, you'll see this sub-tab called Bank Payment Details Debit. Under there's a direct debit checkbox. So you have to check the box on the customer level that says, I want this customer to pay via direct debit. And then you can add what NetSuite calls bank details, but think of them as just bank accounts, right? So you click new bank details, and that pops up this little window here. You can give it a name. Again, you give it a kind of a file format. You put in their actual bank account number. So that's the bank account number the customer gives you. These things you typically pick out of what's called the routing number, but you would work with your bank on this. And then the checking or savings is usually probably checking. And this is a biggie, the type of bank account, whether it's primary or secondary. You have to use primary for the following steps to work. Otherwise, that's what gets confused. All right, so that's basically adding bank accounts to customer records so that you can do ACH direct debit. So the next step, this is what you would typically do like daily. You would go to the screen. There's different ways to do it. I think on this one, the screenshot here is you go under payments, then payment processing, then invoice payment processing. I don't know the page colon to get here. This was also the screen that NetSuite support recommended to use, but there's different ways to do it, which also is what makes ACH a little confusing. This screen is definitely the most powerful. So you can go in and basically say, just show me all invoices that I want to pay. I ultimately want to pay into this particular bank account of mine that are impacting this AR account, and you can go and basically tick off or mark all, just say like, yep, go pay all of them. And when you click submit in here, you can do filters. But when you click submit, all NetSuite's going to do is create a file in the file cabinet that's formatted in that quote unquote NACHA format. Now, actually, NetSuite will also post to your bank account based on what you set. Like you said, hey, this payment, is paid via direct debit, it's posting to such and such a bank account. So, and then of course you can put different payment amounts. So if the customer wants to short pay, you can specify that in here as well. So this is the create NACHA file step, and then uploading a NACHA file. This is, again, NetSuite will only create the file. So to upload the file, there's typically two ways to do it. You either would get the file and it looks like, a NACHA file looks something like this. This is an example I picked off the web here, but it's a text file. You can open it in, Notepad, so it's nothing super fancy, but it's super cryptic. But you would either log into your banking portal, and there should be a place in there where you can actually, push the NACHA file in, or more commonly, you would use a file transfer protocol, typically SFTP, and you would use some kind of automation to push these NACHA files from your NetSuite system into the bank. At Vertafore, we're using Sligo to do the SFTP. However, as a NetSuite developer, I think one or two versions ago with NetSuite now has the ability to write code to do these SFTP transfers. So it is, if you have development capabilities, it should be fairly easy to do. Okay, so other notes. So look for help on electronic bank payments if you're interested in these ACH transfers. That's a good place to start. This bullet I probably should have put up in the very top. So the electronic payments bundle and the advanced electronic payments bundles are the two bundles that you'll probably look for. I think per the chat, the electronic payments, although I know we're talking about bank feeds there, but the electronic payments I believe is free. The advanced electronic payments I don't think is free. Do you have to have advanced electronic payments? I don't think so, but I don't quote me on that.
I don't
What I
think
do
so.
remember, oh, go on.
Sorry, I was sorry. I agree with that. You don't have to have the advanced electronic payments. There are things it gives you over the basic version, but you don't necessarily have to have it.
Yep. Thank you, Corey. A caveat worth noting here is customers who pay via ACH direct debit, it doesn't play well with other payment methods. So primary example, if you have a customer of yours who pays multiple different invoices in different ways. So they like one set of invoices they want to pay on a credit card and another set of invoices they want to pay through ACH, and then every now and then they want to pay through a check. Doesn't really play nicely. The reason being is that this ACH direct debit, as you may have noticed, is a checkbox and not a payment method. So when you check the box, NetSuite kind of ignores the payment method. So it's just be aware that if you have customers who want that one customer wants to pay multiple different ways, you kind of have to do this tap dancing of going into customer record and unchecking the box and picking the payment method, or vice versa. It can be done. It's just they don't play well. Be aware, I mentioned earlier that the direct debit mechanism only looks at primary customer bank accounts. So if you add bank accounts on the customer record that are of type secondary, and then you go create your NACHA file, it will error out saying, you have this customer payment that says it wants to pay direct debit, but I don't see a bank account. So you have to go and you basically have to make sure your customer record's clean there. Be aware that these NACHA files that are put into your file cabinet contain full bank account numbers, so you probably don't want them hanging around, or you want to at least protect those particular file cabinet folders. Be aware, I know I mentioned this earlier, but there's a 3-day delay for the funds to clear between the time when you submit the NACHA file to your bank and the funds actually get into your bank account. It's typically about 3 days. It is also possible that the funds will fail, i.e. the insufficient funds type of situation. In that situation, what actually happens is that the bank, your bank, who you submitted your NACHA file to, they will typically give you back a return, basically a NACHA type of file that tells you like, hey, here's the status of the NACHA that you gave us. And I do not know of a good way to parse that file, or, I don't know of a good bundle that would consume that file and tell you the status of it. So that's another kind of big caveat to this whole ACH, is that you're submitting for payment, but you're kind of hoping that in 3 days all of them go through. If they don't, it'll surely show up on your bank reconciliation. So if you're not doing bank reconciliation and you are considering ACH, I would actually advise you get your bank reconciliation nailed down first, because this 3-day delay and payments that are failing, you'll be able to catch those. All right, that is it that I have for ACH, actually.
Okay, awesome. So we're going to transition over to Peggy, I believe. Let me double check my notes here. Yep, we're going to transition over to Peggy. And then, Mike, if you could just discuss the Cash App Manager process that you use, that would be helpful. And then after that, we'll hear from Katie at RSM. So Peggy, if you're ready, you can go ahead. Oh, I need to make you presenter. Sorry, hang on just a moment.
Yeah, I was going, I can't share my screen.
Sorry, hang on just a second. I gotta find that. Where did it go? Okay, there you go.
Okay, all right. So let me get here. Now, hopefully when I go to the slide piece of it, it will actually show up as a slide. Okay, does everybody see my screen as a slide?
We see the
Am I showing my
presenter's
slide?
view.
Of
So
course you do. Hold on. How about now?
there you go. That looks great.
All right. So it's just the one slide. So anyway, what I want to discuss really briefly is handling lockbox transactions. So it's really interesting because as I meet people who are a little bit younger in the profession or haven't been in the workforce as long, I actually get the question, what is a lockbox? Because as we go more and more to electronic banking, the lockbox has been having less and less favor. So a lockbox is basically a situation that you set up with your bank where all of the remittances that come in by check go to a lockbox. If you look at some of the things that you may still send out with actual checks in actual envelopes, you'll see that it's going to a P.O. box somewhere. So it's going to box followed by a really long set of numbers, usually in like South Dakota or somewhere like that. And once that payment gets to that lockbox, what happens is the bank grabs it and processes it as a deposit. So the advantage of a lockbox is that it's really fast and that it goes right to your bank account. So it's much faster, for example, than me getting it in the mail and opening the check. And then if I've actually got a remote deposit type scenario where I've got a little machine that I can run it through, running it through the little machine and having to do that for maybe 10, 20, 30 checks. So if I get a lot of checks, that becomes pretty cumbersome. So how do I put GP there instead of NetSuite. I apologize. Oops. So this is actually for NetSuite. We're not talking about GP.
I was wondering
anyway.
about that.
Oops. Yeah, that's a blast from the past. I apologize. This is really NetSuite. So the methodology for lockbox imports using native NetSuite. Native NetSuite isn't super, super good about handling lockbox. Part of the thing with lockbox is for many banks, the native export of the information from the lockbox is a BAI or a BAI2. It's getting better to where they will send you CSVs or Excel information that you can download, but parsing a BAI or a BAI2 can be pretty ugly. And it's important to be able to get that information because one of the things that the lockbox provides you with is any information that was on the check stub provided by your customer. So if there is a customer number on there, or if there is an invoice number on there, or if they took a discount, if that amount is on there, things like that are really important to be able to enter the information and match it as a customer payment. So you have kind of three options here. The first one is basic, good old-fashioned manual entry into customer deposits. I am sitting, I am keying. That's obviously the least attractive. You can also import into customer deposits. Unfortunately, the files, because they don't always come in a format that is useful, or sometimes the information on the file will just come in funny because it came in oddly from the actual stub itself, it generally requires some manipulation. Lockbox files don't always contain accurate information that's sufficient to match off against your invoices. So sometimes what you end up doing, you have customer information, but you may not have significant information that's good enough to automatically match it up. Depending on setup, you also might have to go in and import from undeposited funds using a bank transaction file. So if you've got it set up to where your customer deposits go into undeposited funds, you would encounter a second step. Now, I know Mike had talked about Celigo. So, and I know, again, we're talking about Celigo because basically, again, NetSuite, the process for matching up lockbox transactions is going to be very manual in nature. So even if you automate the import, it's going to be manual. The advantage of using a third party is going to be that the cash application happens automatically. Your exception and error handling is much better, and the integration is seamless. Of course, the less attractive piece of it is that it costs extra. So if you're going to if you have significant lockbox transactions, it's a matter of looking at how long it's taking you to do either with an import or manually, and then determine if that extra cost is worth it to get something like Celigo's cash application manager. That's basically about all I have on lockboxes. It's a specific type of transaction that, it's basically a bulk, third party, let's say third party cash receipt that speeds up the cash receipt process, but where there is not an awesome option for handling it in NetSuite without a third party process. But in terms of speeding up cash, if you do a lot of checks, Lockbox is strongly recommended. And on that note, I am going to pass it back to Corey so that he can pass it to Katie to talk about dunning.
Okay. Before that, Mike, did you have anything to add about the process? Because I believe you guys use the Cash App Manager.
Yeah, I mean, I've got a couple of slides to whiz through if we want to about.
That would be great because that would be awesome because that will help flesh it out a bit.
Yep. All right.
Because when I looked at it, when I've looked at the Celigo cash application for Lockbox, it's actually pretty slick in terms of error trapping and so on. And so it definitely is something that would be a nice add-on, particularly if you do a lot of Lockbox.
Yes, which we definitely do. Okay, so we're going to talk about kind of cash application with a heavy bent on Celigo Cash App Manager because that's what we use and it works really well. We're also, again, at Vertafore, we're in the process of kind of going through the setup again with new banks. So the problems you're trying to solve. So the bank has this electronic log of all of your receivables activities. How do you create payment records in NetSuite? And then what would be really nice is how do you match those payment records with invoices? Like, can you just basically, can you go to the bank and say what money showed up and then magically just figure out which invoices got paid, go make NetSuite show that they got paid without having to do anything manually. So Celigo is actually really good at that. So I kind of a high level, so the bank activity log. So they, as Peggy mentioned, they kind of come in a very limited number of ways. So the banks either have reports from a banking portal. So you go to the portal, you run reports, you export to CSV, and we'll talk a little bit more about that. you could have what's called a BAI daily activity file. So this is a file that gives you all activity for your bank account for that day, payables and receivables, everything. And it's typically formatted in this quote unquote BAI format, which is a text file, but really not something you want to parse. Or if you are doing Lockbox with your bank, they will often give you a separate file that's formatted in BAI2 that has very specific details from your Lockbox. And to kind of add with Peggy, the more, depending on how you arrange your things with the banks, they can literally scan all kinds of stuff on the checks. Like customers will send you a check and they'll handwrite in the memo field invoice blah or their customer number, or they can write whatever they want really. And when you work with your bank will ask you questions like, well, what do you want when we scan? Well, do you want us to look at the memo? And if so, what do your invoices look like in customers? And I'll talk about that later. But the bank will basically OCR, optical character recognition. They'll read that text and they'll digitize it into certain fields in this BAI2 file. And then some banks, Wells Fargo being the example that I'm dealing with, they have the ability to present the same information in a format other than BAI2. So Wells Fargo now has a XML-based file in a product or service they have called Receivables Manager, where we can receive Lockbox and wires and ACH all in a single file, which is really convenient because Lockbox is only checks. It doesn't tell you about inbound ACH or wires. So this is a screenshot of the Celigo Cash App Manager. Again, I gotta say, I do recommend this product. So Celigo Cash App Manager, we have somebody on staff who basically their full-time job is to use this app. The high-level flow is that the bank creates that file we talked about, and then Celigo in the cloud pulls that file from the bank, parses that file, and then plunks it into our NetSuite system into this Celigo Cash App Manager dashboard. But what makes Celigo really kind of cool is Celigo will, for every single payment that comes through, it looks at those memo lines and says, okay, that looks like a customer number, or that looks like an invoice number. Let me go find that invoice in your NetSuite system, or let me go find that customer in your invoice system. Oh, look, this payment was for, $170.29. There happens to be, for that same customer, an open invoice for $170.29. So I'm going to go create a payment record in NetSuite for $170.29, and I'm going to bind that payment record to the open invoice for $170.29. So it literally automates the whole shoot and match. Like it takes the money that came in from the bank based on the memo that they wrote on that check. It figures out which open invoice for that customer, creates a payment, applies a payment to the invoice. And in this Cash App Manager, basically, you just make sure it all looks right. Like, oh, yeah, that looks right, that looks right. And then you just say, click, yep, looks good, which, isn't on this particular screen, but you see these match rates. We typically see very high match rates. So that's what Celigo Cash App Manager gives to you. It automates that whole process of creating payments and applying to invoices. Per Peggy's point, a manumatic way you could do is you could download CSV reports from your bank of all the receivables, run it through Excel to ultimately create a CSV that you could then import to create customer payment records. And depending on, again, I've not done this, but if in that CSV report from your bank, if you're seeing Lockbox details like invoices, you could probably from time to time match the payment record with invoices during your import. This is not a process I'd ever hope to go through. Again, Celigo just does this. For automating matching, so So Lockbox, again, often creates or contains and this would be, automating through Celigo. So Lockbox often contains matching info. We're going to talk about the useful tips is really, if anything, I want you to hear this. Celigo Cash App Manager has these sophisticated rules to match things. You would work with your Celigo rep to put those rules together. But you typically match on invoice number and or customer and or dollar amount. So useful tips, if you pick up anything and you think you're going to use Cash App Manager or Manumatic, if you think you're going to do anything in anything really for this receivables matching, please look at how you use customer IDs and invoice numbers in your NetSuite system and use distinct patterns. So for instance, if your customer IDs are 5 digits and your invoices are 5 digits, it's going to be really hard to know when you see a 5-digit number, whether it's a customer or an invoice, unless like your customer numbers always start with a 1 and your invoices don't. So in your NetSuite system, make sure to use distinct, you should in plain English be able to clearly differentiate this is what a invoice number looks like and this is what a customer ID looks like. If you can do that, the automation through Celigo will be really good for you. A related note, not as important, but don't use leading zeros because as you probably know in Excel, leading zeros can get chopped off and it makes the matching just harder. So high level, if you were to do Celigo Cash App Manager, what does that process look like? So first, you would identify what kinds of payments you want Celigo to work with. Do you just want Lockbox or do you also want wires and ACH? You would then work with your bank and say, hey, I want information. I want to digitally or automatically get receivables info for Lockbox and wires and ACH, or just Lockbox, whatever. But you work with your bank and say, do you have that capability? Then you and Celigo work with the bank to identify a file format. Really, Celigo does most of this. So basically, you line up phone calls and Celigo and the bank, and they talk real technical details about file formats, and you just broker the calls. You would then work with your bank to set up SFTP connectivity. That's where basically you get a username and a key established. And then you work with Celigo. So Celigo then works with the bank to create a parser for their file. So that's kind of part of that upper process there. But Celigo figures out a way to parse these files. And then you work with Celigo to install it into your NetSuite system. Celigo would need your SFTP connectivity info here. So that's kind of a high level. I'll to say it's not a trivial process, but it's definitely worth it if you have a lot of receivables activities, if you're doing a lot of manual, creation of payment transactions and matching those invoices. Definitely worth it. All right, that's it on the Cash App side.
Awesome. Thank you, Mike. So if there's any questions on that, you can post them in the chat window or we can talk about them in our open forum afterwards. So at this point, we're going to turn it over to Katie. And I got to find you in the list here real quick, Katie, and then I'll make you presenter. Just a moment. Okay. Should be able to present now. So you're muted, Katie. There we go. Okay, we can see your screen. Just can't hear you yet. See if I can unmute you. Still no audio. We can see your screen, Katie, just can't hear you.
While Katie's setting up, does anybody have any questions on the credit card or ACH or even the Celigo side?
Doesn't look like there's been any questions in the chat window.
Yeah, I realized I zinged through things rather quickly.
So she says her mic isn't muted, but we're not sure why we can't hear her.
Okay.
Are there other options for her to maybe call in
I think she is.
separately using a cell phone?
Yeah, I thought she was called in maybe by what I was seeing on her screen there.
So Adam has a question about using Celigo.
She's called in through her phone through the computer on her phone, through the soft phone, which is how I'm dialed in as well. So that's really weird.
Yeah, I'm not sure. It just says not connected to audio on under her user here. Yeah, I'm not sure, Katie. I don't know if you want to log out, log back in, see if you can get your audio to work. We can answer this question from Adam in the meantime.
Okay.
The question is, can you share any benefits of using Celigo to automatically record cash payments instead of cash receipts? Any thoughts on that, Mike?
Yeah, no, because cash receipt, I'm drawing a blank at.
Yeah, me too, actually.
Yeah, I guess, Adam, can you clarify on when you say cash receipts, what that means?
Because I don't think that's a record type.
Not that I've seen.
You mean cash sale?
Oh, maybe that's it. Yeah, so using Celigo to maybe with cash payments, that's like a vendor payment versus cash receipts being a customer payment. Got it. Yep. Thank you, Adam. So Adam says recording cash payments out of your bank instead of cash received for revenue. So Cash Application Manager from Celigo is only on the receivable side. So that's cash from your customers to into you. Celigo does have a separate product actually called Vendor Payment Manager, which I think is the other side of the coin. So that's cash from you to your vendors. So I think they're kind of two totally different things there.
Katie, do you have audio now?
Nope. So Stan asked
Can you guys
a question.
hear me now?
Yes.
You can.
Yay.
Yay. Okay.
Sorry to interrupt.
That's all right. I'll answer Stan's on a chat, so you can keep going.
Yep. Sounds good. Okay. Take it away, Katie.
Okay. Perfect. Sorry about that.
No problem.
All right. So I'm going to go over the Dunning Letters Suite app that NetSuite has. I first wanted to get into the definition of Dunning letters and then how NetSuite helps support Dunning letters. So Dunning letters in general is a systematic method of tracking overdue invoices and sending letters to customers to demand payment. NetSuite helps that by enabling you to set up an automated Dunning process in NetSuite to help manage the collection of your accounts receivable and send reminder letters before payment is due. So that would basically, NetSuite is tracking overdue invoices in the system and then sending emails, or you print out the invoices and send them manually in the mail to your customers, asking them to pay their bills. So a quick overview of Dunning in NetSuite. I'm going to mainly focus on the middle section, so the actual setup and the features that Dunning has. But first, we're going to get into the two different records that Dunning triggers off of. So the customer and the invoice record, and what it looks like depending on which record you choose, and then setting up email templates or PDF templates and Dunning levels. We'll get into more of a definition of what all those mean in the next slides. And then mainly focusing on the main meat of Dunning, so setting up that procedure and connecting all of the pieces that are set up in NetSuite. And then lastly, I'll go over specific features that are on the customer record that you can do as well. So NetSuite and Dunning in NetSuite is a bundle that you can install. There are two ways that Dunning triggers in NetSuite. It can otherwise trigger on the customer record or on the invoice level record. NetSuite recommends that you do it on a customer level. And basically the difference between both of these is if you do it on a customer level, it will send out one email per customer, and it will attach or list all of the overdue invoices on that one email. If you do it by an invoice level, it sends out individual letters for each invoice. So for example, and I have an example on the next slide as well, but example would be if you have a customer with 3 overdue invoices, it's only going to send one email and tell you the 3 invoices that are overdue. Whereas if you have an invoice level, it will send out 3 individual emails for each invoice. Most of my clients, I've only implemented on the customer level, but the point of an invoice level is if you have specific requirements on the actual invoice and not on the customer record. So you instead want to do it on the invoice transactions instead of the customers. So after you define which record you want it to trigger on, then you're going to want to set up Dunning templates. So a Dunning template is a record where you select the template files to use for your Dunning letter. This is basically a template that you set up to either send out in an email, or you can also set it up as a PDF printout. So that way you can print it out, the client can print it out, and then they can physically send it in the mail to their customers. The setup of this is pretty simple. If you guys are familiar with setting up native NetSuite email templates, it's basically the same process. So it's very simplistic. And then below I have examples of what a email template would look like. I have an example of the customer Dunning and then also the invoice Dunning. So as you can see here, they have the verbiage that they want in their email. This will stay the same, and then it will bring in specific invoices that are overdue. The customer level has all 4 of them that are overdue, whereas the invoice level only has 1, and it will send, in this example, if it was the same customer, it had 4 invoices, it would send 1 for customer Dunning letters, and it would send 4 for the invoice Dunning letters. So after you set that up, then you're going to want to create Dunning levels, which is what these email templates will be associated with later. So the main purpose of Dunning levels is a record that defines the days overdue and the outstanding amount threshold. Basically what this is doing is it's setting how many days overdue on a customer record you would like to send a Dunning, and then the total overdue balance you would also like that to be in order for the customer to get a Dunning letter. I'm going to focus on this image down here first this is setting one of the levels out of the 3 that I have in the demo account that I got this from. So it's basically just telling you this is level 1. It's going to trigger a dunning letter if on the customer record the overdue days are 30 exactly, and if the total overdue balance is over $1,000. It also has a minimum invoice balance, or a minimum invoice amount. That is basically for dunning not sending anything under $100. Most customers like that because you don't want to be sending a customer an email if it's only for $5 for a $5 invoice. That's not beneficial in a business to keep on sending them emails reminding them, please pay your $5 invoice. On this page, it also lets you set up multi-currency. So Dunning works good with the multi-currency feature. And then that's basically how you would set up one level. In this account, I'll go over setting up the 3 levels, so displaying it with just the level 1, 2, and 3. They have the same dollar amount threshold. They could be different though. And then this one is increasing from 30, 60, and 90. And these could be whatever you wanted as well. So after you have the email or printout templates and the dunning levels, then we're going to go to the dunning procedure and connect those to one another. So the dunning procedure is the main meat of dunning. This is where all of the information is stored and where you can connect every piece from dunning. So a dunning procedure has to have at least one dunning level. And the dunning levels indicate which dunning letter template to use for a particular dunning level rule. So as you can see below, this has all of the dunning levels that are in this account, so level 1, 2, and 3. And then if you go over, it is associated with a specific email template. They each have different email templates. They could be the same if you wanted to set up a level for 30 days and then 35 days just as a continuous reminder, but these ones are different. So how this would work in NetSuite is you have a customer, it has overdue invoices that meet those thresholds. On day 30 of that account, it's going to send that customer an email listing all of the invoices that it needs to pay and that it's overdue. The first email is generally a reminder email saying, hey, you're overdue on your invoices, please pay this amount so that we can get your account cleared out. Then it would go to the second level. It would send an email on day 60 on the customer account that says overdue, the balance overdue date. And then the next email would be more direct, saying, please pay your invoices. If you don't, we're going to freeze your account. So that's kind of the purpose of having dunning levels and different email templates in the system. And then the last dunning level could be something worded like, hey, we've frozen your account, you haven't paid your invoices, it's been 90 days, we'll unfreeze it once you pay your balance on your account. The other nice thing about the dunning procedure is it also allows you to filter which customers and invoices to bring into the procedure. There's 2 ways it lets you do this. One is through the native NetSuite segments. So that would be, you could only bring in subsidiaries from your main headquarters or a certain subsidiary that you wanted to bring in invoices and you didn't want to send to dunning from any other subsidiary. You could also do that with class, locations, and departments. So if you only wanted to send dunning for a specific location or a specific department that is on that invoice or customer record. The other way to filter on the Dunning procedure is to create a saved search. Most of the time this is done if your customer has customer categories. This would be like saying your customer has a category for all of its main customers, the ones that buy from it the most frequently, they buy from it all the time, they have deals with them, and then a second category for the one-off cases, customers that just buy from you a couple times a year or when it's convenient. So if you wanted to, you could create a saved search, only bring in invoices for customers that are your main clients, and then denote that on the Dunning procedure, and it would only send to those customers and negate any of the one-off customers. And then the last thing I want to mention on the Dunning procedure is there is one downfall that I've seen while implementing this for clients. So the way Dunning works, since it sends it on the actual overdue day that the customer account has, for this example, after level 3 at 90 days, it's not going to send any more Dunning letters because it's already hit that one day, that 90-day threshold. So it will just stop sending the Dunning. There are two things that I suggest to clients. One would be to create another level, so creating level 4 for 120 days, and then it would send another letter. The problem with that is it's to infinity that you would have to keep creating levels if you didn't stop and freeze that customer account or get that money for that customer. So another suggestion would be to monitor the customers that have hit level 3 so that you can otherwise manually send them emails, or you can freeze their accounts, keep track of whose accounts are frozen, and be in contact with them until you unfreeze their account. You could do a little bit of both too. You could add, a couple more levels and then create a saved search for customers that just aren't paying and decide if you want to actually get payment from them or if you want to freeze their account and then just write it off. And then the last feature that I wanted to go through that Dunning has is the specific things that are stored on the customer record. So when you install the Dunning bundle, it automatically adds a tab to your customer record and stores some useful information that the Dunning process does. So just some basic information that it has on the record is it has a checkbox to allow letters to be emailed and allow letters to be printed. And that's just saying that this customer, you want to be accessible to Dunning and send emails from their account. It also lets you know which Dunning procedure it is associated with and which Dunning level it is at. So that would be level 1, 2, or 3. And then it tells you the last time an email has been sent to that customer. So the last time a Dunning email has been sent to that customer automatically from the system. Two features that I think are really important is on the customer record, you can pause Dunning. So there's a checkbox that allows you to pause Dunning. Customers have done this. Sometimes you do it for, one of your main customers that a client has, and they're telling you, hey, we're going to pay you. We know that we're due on invoices. We're going to pay you next month. Can you please stop sending us these reminders? I wouldn't suggest that, but it does allow you to pause customers' Dunning. And then it has you give a reason to why you paused it. Another nice thing that it allows you to do on a customer record is Dunning automatically sends to the email address that is on the customer record, so that primary email address. And you can only put one email address in that field. So if you wanted to, you could check the do not send letters to the customer email address, and you could designate under this tab which email addresses you wanted to send it to. This is how you can send dunning to multiple people in a company. And if you don't want to send it to that primary contact, you can specify which contact you do want the dunning to go to. That's the last thing I had on the features that Dunning had. Did anyone have any questions?
Let's see if there's any questions. If you do have any questions, you can post it in the chat window. Any questions for Katie? Doesn't look like anything's coming in right now, but we'll be here for a little while longer for to answer some other questions. Katie, thank you so much. That was a great presentation, very thorough. And dunning, not many people understand like what it is, or maybe haven't even heard that term, and so that was good to know. So let's see here. That's the end of the main presentation. So I'm going to go ahead and post the CPE checkout code, and then we'll have some tips and tricks from Dana Larson, and then we'll have a little bit of time left for an open forum. So I'm going to bring this up and share my screen. Just a moment, please.
Hey, Corey,
Yep.
While you're doing that, a quick note on dunning. Conceptualize something I've seen that's valuable is if you send your customers reminder emails before they are due, you will actually find that you get fewer customers who have, past due invoices. So setting up, she's talking about the dunning levels. Set up a dunning level that happens actually before they're past due.
It's a great point. Thank you, Mike. So that is our checkout keyword. Checkout keyword is fever. The URL for checkout, you should already have it if you've done the check-in part. It's the same URL. Let me see if I can find it again real quick. We can post it in the chat window.